Did you know that as a US citizen, you could drastically reduce your taxes by moving overseas? In this video, we're going to be talking about how that works and how the average person making $120,000 a year in California can save almost 29,000 US dollars by moving overseas.
Hi, and welcome to Entrepreneur Expat. This is
Justin.
And I'm Amanda. And on this channel, we talk everything you need to know about full-time travel, living overseas, making money online, and everything in between. So if that's something that you're interested in, make sure to subscribe and hit the notification bell so you don't miss a single video. Also, make sure to give this a like because we have a mission to get in front of 1 million entrepreneur expats or aspiring entrepreneur expats. And when you give us a like, it helps with the algorithm gods, and then we are able to do that. And as always, anytime we talk about money on this channel, because you got to figure out how to make money when you're living in other countries and it affects your taxes and all that stuff, we have resources to help you get started on your own entrepreneur expat journey. The first is our free Make Money From Anywhere guide. This will teach you the 5 skill sets that you can use to make money from anywhere in the world. Doesn't matter what country you go to, these 5 skill sets will always make you money. And for those of you who want to take it a step further, if you want to take advantage of a lot of the stuff that we talk about on this channel, you have to start your own location independent business. The tax system favors business owners and investors, period. So we have put together a 4-week boot camp that we are starting in early November called the Get Your First High-Paying Client Online Boot Camp. You will be working with us during those 4 weeks to really get you started with the basics and help you land that first high-paying client in 30 days. So we have spots that have been selling for that. They are very limited, and you can find all the information on what we're covering, what the curriculum is, and how to join us below. And make sure to hurry before we close registration because we're only going to do this for 10 people.
Yeah, and we've already got 2 spots that have been sold. And
As
we haven't
of recording
even
this.
promoted the course yet. Great, so jumping right in, I want to first talk about how the US tax system works and what some of the implications are of moving abroad. Now, a quick disclaimer for those of you watching, we are not accountants, we are not CPAs, none of that. This is for purely educational and information purposes only. We don't claim to be giving any kind of legal or tax or accounting advice. If you are interested in getting specific advice, you definitely want to consult with a qualified tax practitioner based in the country of origin that you are in. So very important to note that. But we will share our own personal experiences about how we've dealt with taxes, especially as expats living abroad. So first main point to note is that the United States does tax all of its citizens on global income. Now, what that means is that wherever you are in the world, whether you work for a US company, whether you work for a foreign company, whether you work for yourself, you need to file US taxes if you are a US citizen. And there are also a lot of other reporting requirements, such as the FBAR and other forms you need to fill out if you've got interest in foreign companies or if you have foreign bank accounts above a certain amount. So very important to know that, even though there are exclusions, and we're going to talk about some of those right now in this video, you need to know that as a US citizen, you are responsible every year for filing your taxes and in most cases also paying something to the US government in addition to potentially having tax liabilities where you currently are. And we're going to discuss how to lower some of those tax liabilities, especially on the US side.
So one thing that's important to note is, number one, like we said, United States has citizenship-based taxation. It's only one of 2 countries in the entire world that does that. The other one is a country in North Africa and it's a dictatorship, so make of that what you will. And the second thing to note is that specifically it is worldwide income. Some people might be like, oh, but if I start a business in Mexico, do I pay taxes on that to the United States? Yes, it's worldwide income, right? So it's important to know that the United States is coming for all of it. If you have businesses in other countries, stakes in other countries, investments, passive income. It doesn't matter. Uncle Sam is coming for his cut. There's confusion about that because people think, oh, well, if I go to Argentina and I just start a business there, then I don't have to pay taxes to the United States. You would be incorrect.
Exactly. So let's get into the meat of this, which is how do you save $28,711 per year by moving abroad? Now, here's how we got those numbers. If you are a California resident, in my case, I was born in California. California has a very high state income tax, especially at those higher income tax brackets. And what we're going to be basing all of our calculations on is the maximum allowable amount from the foreign earned income exclusion, because that is what allows our fellow U.S. citizens to exclude income that they make when outside of the United States. So we're basing our calculations on a California resident like I was, earning a net income of $125,000 a year. This is based on data in 2024. And what that California resident in the US would be liable for is about, I'm just going to round up here. The total was, like I mentioned, a little under $29,000. But rounding up, the federal taxes on the $125K of net income come out to about $20,000. Then the California taxes come out to about $8,800. And then in addition to that, you're also paying a little above $19,000 in self-employment tax. So the total taxes for a California resident are about $47,000. And just to clarify, we are running these numbers assuming that you have a business based in California and that this amount is your net income, because you do need to actually have a business for the foreign earned income exclusion. If you're on a payroll of some other company, then this isn't going to work because they're going to likely have to have you registered as an employee in whatever state that you're in, which potentially could be a state with very high state taxes. So roughly you're looking at $48,000 in taxes as a California resident. Now, if you move to another country, and before you do so, also very important caveat, you have to make sure that you're also domiciled in a state that does not have income tax. So that could be moving to a state like Texas, like Florida, at least on paper, before you move out of the country, because otherwise California might think that you're still a California resident, and this would not work anywhere nearly as well. I'm currently a resident of Texas for US tax purposes, but because I reside outside of the US, I'm not paying income tax or federal income tax or state income tax to Texas because they don't have an income tax. So going back to the numbers
and
here.
I'm in Florida, so
Yep.
no state income tax there either.
Exactly. So looking at these numbers, if, however, that business owner, instead of being in California, were to move abroad, the only taxes that they would be paying on that net income of $125,000, the only taxes there would be $19,125. So comparing the two, the $48,000 in taxes roughly as a California resident living in California, domiciled in California, that is not getting the foreign earned income exclusion, that is about $48,000 versus the U.S. citizen living abroad. They're only paying $19,000 of taxes. So the difference is almost $29,000.
That is significant.
That's more than what we pay in rent here in Mexico. So we would be able to actually probably pay for most of our living expenses just on what the average high income earner would save in taxes by moving here, which is kind of amazing because between the two of us, just in terms of what we save in taxes from the US, even as business owners, even with all the deductions we have, I would say that just the tax saving alone pays for most, if not all, of our living expenses. That's rent, food, housekeeping service, groceries, like everything.
So when people say geo arbitrage, they think it's only, hey, I'm going to move to another country with a lower cost of living. And you said this earlier, a lot of people don't think about the taxes and the tax game. And I said, well, it's because most people are not educated on these things, which is why we're doing these videos. But how important is figuring out the tax part of it? Because everybody's always talking about cost of living. Very few people talk taxes and how much that affects you.
It's very important. And it used to be, for example, that a lot of business owners and a lot of crypto people were going and moving to Dubai because they had zero tax. Now it turns out that they're definitely changing their stride a little bit, and instead of having zero tax, they're actually increasing that to several percent. Taxes are very important, and you want to look at what type of place is not only advantageous from a cost of living standpoint, but also from a tax standpoint. And Mexico, fortunately, does not currently, to the best of our knowledge, charge any tax on income that, let's say, a temporary resident like we are makes overseas. So you get the benefit of not having to pay any taxes here in Mexico, and also having a lot of your income excluded from federal taxes in the United States.
I think I saw Doug Casey saying Argentina is similar, as long as you're not there more than 6 months out of the year. So this is a difference between Argentina and Mexico. In Mexico, you could have the temporary residency, and there's no like time limit on how long you can be here before you get taxed, right? And then in Argentina, it's about 6 months. But the way Doug Casey was explaining it on a recent Nomad Capitalist interview is like, you're a well-to-do foreigner, you're bringing dollars to the economy, you don't cause any problems, so why tax you?
And another option, if you're interested in being more of a digital nomad and traveling and exploring more countries at a time, you don't actually have to necessarily be a tax resident of really any country. Again, this is not tax advice. This is just our own research and what we've looked into. But as long as you spend more than those 330 days outside of the US, you might spend 3 months a year in 4 different countries. None of those countries can really say that you're a tax resident. At least most of them can't, because their laws are that you have to spend above 6 months in that country to even be a tax resident at all. Again, with exceptions like Mexico, where if you are a temporary resident earning money from outside of Mexico, they don't tax you. And the benefit there is you can kind of be a perpetual traveler, like a perpetual nomad, travel around. We decided not to do that, at least not right now. But you do want to look around and essentially shop for countries based on not just the cost of living, not just the quality of life there, but also what types of tax advantages or disadvantages they have. I know, for example, Colombia, where I did live for about 3.5 years, they actually have very high taxes, especially on the higher income earners. Now, there are some loopholes and some caveats and some different types of exceptions that you can find, but you want to make sure you're tax planning properly, because the last thing you want to have happen when you're going and establishing a life overseas somewhere is for the DIAN, which is the tax authority in Colombia, or the SAT, which is in Mexico, to come knock on your door and say, hey, you gotta, you owe us $30,000 you got to pay up now, or we're canceling your immigration status, or whatever else they want to do. So it's very important to be cognizant of those sorts of things.
Yeah, and from a personal finance perspective, because I did spend 8 years as a personal finance educator, the 3 biggest expenses people have are rent, food, and you could argue it's 4. Rent, food, transportation, and taxes. So a lot of people don't realize that those taxes are a big part of why your money's going out the door the way that it is right now.
Yeah, which if we do the math too on that 50,000 number, so about 48,000 over 125,000, that's almost 40% of a gross tax rate, which means that if you look at, okay, let's take that over 12. So 4.6 months, almost 5 months of the year. So January, February, March, April, May, you're working for the federal government and the state of California. Like, to me, that's just insane.
Yeah, I mean, I think I saw somebody post this the other day. The government does not actually work for you. In fact, right now in the United States, with how much you're paying in taxes and cost of living, you are working for the government to bring them revenue.
And more importantly, this is something that's really not talked about a lot. Taxes aren't really how they get you. How they get you is by printing more and more and more money that's backed by nothing other than maybe
air.
Well, you're trusting the government and a few F-15s. basically. We're like, yeah, people have to take the US
Or
dollar.
the rest of the world deciding that the U.S. dollar is the
reserve
currency, and now there's lots of movements like BRICS and things like that where people are pushing back on that, and the petrodollar deal fell through, so now there's pushback on that. So basically, the value of the U.S. dollar is based on everybody agreeing, essentially
And
air.
right now, they're starting to not agree very much.
So these are all things to consider and take into consideration. I'm glad you brought this up as a topic of discussion because I've learned a lot about the taxes and things from you while we're going through this entrepreneur expat journey. And a lot of people just don't know this stuff. Like they don't know if you're an employee, you're getting taxed more than anybody.
You're getting hosed.
You're getting hosed if you are an employee. Now, if you run into self-employed, you're still getting hosed, but at least you are making your way over to running an actual business or having investments, which is where those tax breaks start kicking in. It's like that in the United States, and they do the exact same thing for Americans outside of the United States. That if you're an employee, you get hosed and you still have to pay into the system. If you run a business, there's ways to not get hosed. So a lot of people just don't know this stuff. They don't realize that taxes are one of the biggest expenses,
especially
that they have in life.
Yeah. And the tax code was really written so that business owners could take advantage of it and not have to pay taxes. People talk a lot about Trump and his tax returns and how he's not paying his fair share and all this stuff. And it's like, you look at people that are very wealthy and the percentage of economic impact that they have and the contribution, not just to society as a whole, but also in taxes. Maybe not income tax, because income tax they shouldn't have to pay. But they're paying payroll tax on their employees, they're paying sales tax on all the things that they buy, they're paying wealth tax, they're paying death taxes. I mean, the list goes on and on.
Death and taxes are the only two certainties
exactly
in life, at least in the United States. And I remember when everybody got mad at Trump, and we're no fans of Trump over here. There's lots of things to get upset at Trump over, but playing the tax system is not one of them. That was one of those don't hate the player, hate the game moments, and the game is built by people with money who want to continue helping other people with money. So what is the lesson for people
The
in
lesson
that?
is to get on the right side of that, which is to become a business owner, start your own thing. And it's not just because you're going to make more money doing it. You don't necessarily even need to make more money doing it. If you have a six-figure job, let's say you're making $150,000 a year in tech, like several of our clients are, they don't need to make that kind of money, number one, to have the same amount of take-home pay at the end of the day. You only need to make about, 50 to 70% of that as a business owner because of all the credits and write-offs and everything else that you get. But not only that, you may decrease your cost of living by 50 to 75% living in another country. So you could have the same quality of life, maybe only making 70 or 80K as a business owner, which, by the way, is going to take a lot less time out of your life than your six-figure job in tech that is installing spyware on your computer and bossware and making sure that you're at your screen every second of the day during work hours.
Or working the 3 jobs that a lot of Americans are working right now just to make ends meet. It's what we say all the time. It's all a math problem. And once you figure out what the math is, then you can figure out the formula. We can help you do that with the first step. We've got that boot camp coming up to help you figure out how to get your first high-paying client online. We both have been in online business collectively 30 years, more than that at this point, and we have condensed those 30 years into a 4-week boot camp to get you started off on the right foot so we can start getting you, like you said, on the right side of the equation.
Exactly. Well, that was all for now. Make sure you like and subscribe, and definitely check out that boot camp. The link will be right below this video, as well as our Make Money from Anywhere guide, and we look forward to seeing you again on the next one.